I'm a bit more optimistic for 2026. A lot of businesses are founded in economic downturn. There's always a recession somewhere, always. The only thing that matters is who knows you.
Marketing, like a symphony, is a harmonious blend of instruments. But without the proper direction, it's just noise. Welcome to the Supply Chain Marketing Show, presented by Supply Chain Brain Media. From the art of storytelling to the science of data, we'll uncover marketing strategies that drive success. The financial future and supply chain marketing, are they really connected? Jason Schenker, president of Prestige Economics and the #1 economic forecaster in the world in 27 different categories, including material handling in the supply chain space, will answer that question and much more. Now, here's your host and supply chain marketing guide, Ralph Henderson.
Welcome to the Supply Chain Marketing Show, brought to you by Supply Chain Brain Media. Economy, the future, and supply chain marketing. We're going to connect how all of those matter to the supply chain marketing professional. And at the end of this podcast, you're going to be more inspired by knowing what you can do and why it matters in the supply chain space based on what's happening in the world of finance and content development and content marketing. Hi, I'm Ralph Henderson. I'm your guide and host of the Supply Chain Marketing Show. And I'm very excited to bring you a new episode about finance and content marketing. And today I am uber excited, and you will be too by the time we get done with this show, to bring on Jason Schenker, the world's leading financial futurist. Jason prepares leaders for the future. He's the chairman of the Futurist Institute and the president of the Prestige Economics. Bloomberg News has ranked Jason as the #1 forecaster in the world in 27 different categories since 2011. Jason's given over 1,200 speeches and over 1,000 television interviews. He's written and edited 36 books. He has talked on emerging technologies, finance, energy, supply chain, the economy, and much more. I know Jason because he is our economist for the material handling and the supply chain space, and have worked with Jason for 12 years. We want to welcome in Jason Schenker. Jason, welcome to the show.
Thank you very much, Ralph. It is great to be here today. I greatly appreciate you having me here.
Oh, my goodness gracious. It is my pleasure. So, Jason, first of all, I would be remiss as a producer and a host if I didn't say, how are things out there, in your opinion, as it relates to our industry right now in a nutshell?
Well, I think for supply chain and for material handling and manufacturing, 2024 was kind of a tough year. Interest rates were very high, backlogs were being burned off, inventories were being burned off, but new orders were quite sluggish because of those high interest rates. Going into 2025, we have lower interest rates than we had last year, but inflation is still elevated, which could keep interest rates from going down rapidly, right? We're probably only going to see modest decreases this year. And otherwise, I think people are kind of a mix of things going out of the presidential election because it was a swift, decisive outcome at the end of 2024. I think there was optimism. I think there was a lot of concern that it would not be a swift and decisive outcome, regardless of outcome, that it could get drawn out. And that would have been really the worst case scenario for economic and political stability. But a swift, decisive outcome, very positive for planning and stability in the economy and socially. So those things are pretty good. The labor market's strong. That's giving good tailwinds for this year. So there are some reasons to be optimistic about this year, at least a little bit. I'm a bit more optimistic for 2026 and 2027, seeing interest rates likely to go lower, which would likely send both material handling, new orders, supply chain activity, and manufacturing, sending all of those higher.
Yeah, and I appreciate that. One of the reasons I wanted to have you is for just that reason. It's interesting, and it's kind of a two-edged question or sword, and that is, on one hand, you have the general business and marketing thought and activity, and on the other hand, you have the specific supply chain material handling. But where they come together is we're typically a reactionary culture. And, we typically wait until something happens. So if I'm a supply chain marketing professional and I'm trying to get ready for 25 as far as the runway, and then look at 26 and 27, to your point, as being those years that I might be able to take advantage of the economy being stronger, what would you give these folks as advice for how they might do that, or how they might prepare for that, and what they would use to be confident in that?
Yeah, I mean, I think that 2025 might be a year in which we're seeing businesses develop their platforms. And by that, I mean their online presence and whatever assets, their digital assets they have to drive traffic. So we think about videos, books, articles, content marketing, anything and the like. 2025 might be a year to really invest and develop that content going into what's likely to be a stronger 26 and 27. That's what I might see. Obviously, not just for content marketing, but marketing in general. I think, things were probably pretty tough in 2024. We saw things slow down, but e-commerce ended Q4 2024 at record dollar levels and an equally record 16.4% of all retail was e-commerce. And so that 16.4, a previous record equal to that, was set in the first half of 2020. So we're at least equal to 16.4% as a percent of those goods, record near volume, or at record volume, equal to record percentage of total retail sales. So, lots of good things going on for the industry. But despite that, there was still some sluggishness, still some hesitation. Of course, there's risks this year: geopolitics, trade, tariffs. All of those things present risks to the 2025 outlook. But looking at 26 and 27, you're going to want to have a bigger platform, richer content, lots of things to drive traffic, and a client flywheel in the year ahead and beyond.
Yeah, and I appreciate that. And better than anyone, in working with the material handling equipment manufacturers for the last 12 years, that we traditionally have pretty long cycles as far as sales and manufacturing and deployments and all of that. So I think one of the things I'm hearing is, if you've got a 12-month, 18-month cycle, if you will, now might be the time to get going. So because you're so tightly connected with the material handling industry, I know that the big shows that they do, like ProMat and Modex. So for people who are preparing for those shows, what advice would you give people who are in that supply chain and material handling marketing position in getting ready for these shows, and how they should prepare and go forward?
Yeah, this is a great question, Ralph. And, because we just wrapped up ProMat in Chicago, I think looking ahead, it's kind of tough to imagine, hey, we should already start thinking about Modex, but we should absolutely already be thinking about Modex in 2026, because that's probably going to be a year when we could get more revenue on the back end into the industry. You're going to see more demand, lower interest rates. Those sorts of things could be really conducive to activity. So thinking about your marketing plan now for that in 2026, great idea. It's also always a good time to have some lessons learned from your latest big marketing push. So what worked at ProMat, what didn't? Let's plan for more what worked in 2026 when we do Modex. And also, what should we be thinking about for 2027? Because if those are going to be two better years, man, the ROI from those shows should be even bigger, especially in a lower interest rate environment.
Yeah, no kidding. Okay, so now I'm going to touch on something that I know is going to excite some people and probably piss some people off. And that's okay. That's one of the things we like to do here, is be a little provocative. And that is, you're a business owner. content development. You've written 36 books. I mean, you write for Forbes. I mean, you do a lot of things in the business space in addition to content. But why is it that we have this mindset that when the economy softens, we get rid of the front end of the business, i.e. marketing, and we quote, wait for, things to get strong again or wait for things to come back? From a financial perspective, what would you say to people who have that mindset of cutting off the front of the marketing when things soften and waiting for things to come back before they do anything?
This is a very tough question.
I know. But again, from a financial perspective.
Yeah, look, from a financial perspective, some industries at some points in the cycle, no matter how much you market, if the sales dollars aren't there, And businesses often look to reduce costs. I've written a couple of books on this, but one is called Strategic Cost Cutting. And it looks at, where are you making money and where are you not? And marketing, again, if it's not going to lead to top line revenue, that's why we often see pullbacks. And so that can be a risky industry. The good news is there's always an industry somewhere that's growing. And even within material handling and supply chain, while some areas may be under pressure, last year heavier capital equipment was, but we know that e-commerce had a record year last year, right? So it just kind of depends where in the space you are. But for most business leaders, for most CFOs, if they realize no matter what they do, it's not going to drive top line revenue, then that's why they're cutting those costs. Now, that doesn't usually mean a company will eliminate its entire marketing function, but we are very likely to see, when you see slowing, you do see some paring back costs in the marketing area. Now, sales is a different story, because in some organizations, if you're worried about making sales, you can push people to 100% commission, and then it doesn't matter, right? Because hey, they keep what they kill. And even if sales are down, if people want 100% commission roles, well, everything they bring in gets them paid, gets us paid. Marketing's a little bit different. Marketing's a longer term investment. So, it can be longer term, it can be shorter term, but I think investing in platform and digital assets and doing that, those are going to be your highest value things to kind of increase your footprint in the long run, because your competitors are still going to be there after a down cycle. You're still going to want to market your business on the uptick, but there's always that risk that marketing is kind of one of those first things cut if there's a belief that sales, that the purchasing dollars just aren't going to be there. Sales will never materialize.
We'll be back after this brief message.
In today's complex supply chain, marketing has never been more critical. But are you leveraging the full potential of your marketing efforts? Supply Chain Brain Media created 2 resources to help you discover what's new and what works. The Supply Chain Marketing Group series is designed to educate you on services and how to implement them into your marketing program. On the Supply Chain Marketing Show, hear firsthand how experts are implementing the elements from the 5 rings of supply chain marketing to drive results. Ready to elevate your marketing game? Schedule a 30-minute consult today. Email Morgan at supplychainbrainmedia.com. Supply Chain Brain Media, your guide to marketing success.
And now back to our show.
So let's talk about the different areas of marketing. When Supply Chain Brain put a think tank together in the summer of 2023, they had 12 executives with 100 supply chain marketing people for 3 days. And they talked about how it really boils down to branding, lead generation, content development, online, and earned media. So when I was listening to your answer, I was thinking to myself, from a marketing lead gen perspective, maybe pivoting, refocusing, diverting when we're in an economy that's soft in one area to another area might be beneficial. But the other is, what about the branding? And I know you've written about this, and I know you have experience on this. What about the branding as it relates to the marketing in addition to those other 4 areas? What would you tell people they should be doing this year going forward as far as branding is concerned?
I mean, I would tell people, it depends on the size of the business. Public and private companies handle this very differently, but building out the platform, having more digital assets, having resources, having visibility, earned media, paid media, press releases, you need to push that on all fronts. I run a small economics shop, but I probably send about 2 press releases a month. I have a sizable following on LinkedIn, and 150,000 people have read my Forbes articles. 1.3 million people have taken my online courses. Like you need to have a presence, but if we were to see a protracted kind of downturn, that, by the way, none of that goes away, right? It's just, maybe I would be dedicating less to that. It kind of depends on the business, right? I'm also in an intellectual capital business. So I'm in the brain business, which is a very different thing than being in the supply chain business. So how I approach marketing is my intellectual IP and the value I can bring, that is where the money is. I earn in 2 ways. I earn through speaking at corporate events, corporate boards, private public company, internal briefings, retreats. I do all kinds of things. Speaking is a big thing. The other is research. So forecast, market analysis, statistical creation of data like we did for MHI, the monthly index, the MHIBA produced by Prestige Economics, comes out every month about material handling. So, there's different things I do, forecasting, all of that's the research side. So there's speaking and there's research. And both of those are really driven by the brand that my companies have, that I have, by other parts of content we put out there. Now, depending on what part of marketing you're in the supply chain world, your business may be driven by a physical product. Well, physical product doesn't go away in a downturn, right? The manufacturing, the service contracts, the maintenance, that doesn't go away, right? If you're in a service business, that's a little different. If you're in a large entity where you do, say, varied projects, or if you do large projects, for example, like an SAP conversion or automation integration or something else, those tend to be large capital projects, as opposed to, say, the equipment side, where, well, equipment needs to be serviced and maintained, and people are going to buy it regularly. Large projects, implementation projects of various kinds, we might see those pull back if the economy slows. Oh, it's a big capital commitment. Once you start doing an SAP conversion, once you start doing automation, you can't stop that. And so those are usually binary decisions, up or down, but with a long-term implication. As for the marketing for each of those projects and products, it's all very, very different. And of course, there are people in the supply chain world who are also in the intellectual capital business. And so that's branding and marketing. And I don't know, maybe doing things like podcasts like you do here. So, there's folks who do all kinds of different things, but it really depends on where you are in the sector. And for some of those, it can make a lot of sense to try to ramp up ahead of demand. But for a lot of those, it also means if demand isn't there and it doesn't look like it's going to be there for quite some time, that's where you can get those pullbacks.
I know some of your colleagues in the financial business, the pragmatic, go after the business when everybody else is backing away. The whole blood in the streets quote, if you will. If everybody else is not doing it, then if you believe enough in yourself, you should do it. And I think what I'm hearing you say is there's some factors, obviously, that you need to consider, but that's not necessarily a good or a bad answer.
Well, allow me to clarify one thing about the blood in the streets. The actual quote is the time to buy is when there's blood in the streets. And the reason that's the case is, people are scared. When people are scared, they make fear-based decisions, and there's usually stuff you can buy. The other thing is, of course, from a practical standpoint, if you're thinking about investing in equities or buying a business, when the economy is in the tank, interest rates are really low. And that makes capital a little cheaper to come by if you want to acquire things. And of course, there are a couple of different parts of a business valuation. And one part is how much money you're generating. Well, if you have a business and it's not generating any money, well, time to buy it is when it looks like it's dead, right? And this is, another thing most people don't realize. A lot of businesses are founded in economic downturns. I started my business in 2009, but you can look at any downturn. There's a large number of businesses that are founded. And if they can make it in a downturn, the up years are a lot easier. So, I think that, from an investment standpoint, that's true. I think investing in your own business or trying new things when, the economy is in the tank or something like that. Again, this is all theoretical, but when there are tougher times, that's a riskier proposition. Right. And when capital costs are high, taking risks are dangerous because the cost of money is very expensive. When the economy is in the tank, taking big risks is very risky because you're already seeing down money. And of course, that's very, very challenging. The time to take some of the biggest risks is when, the economy is kind of on an upswing. Things are getting better. Interest rates are still low, but they've moved up, but they're not high. Somewhere in there is that window to make those riskier bets. Now, as an investor, you could also say the same thing, because if things are in a downturn, you don't want to be trying to catch a falling knife either. So this is really, again, we think about the push and the pull of opportunity and risk, fear and greed. Those are always kind of pushing and pulling on any business. And I would continue to advocate for identifying where the real solid money is coming from and trying to secure that, shore that up, because if you have those funds, really, if the big core of your business is secure, then you also have more freedom. Obviously, if you have no debt or low debt, that also gives you freedom, both at a business level and as an individual. But the minute you have debt, now you have fewer abilities to say no. And if you can't say no, you can't actually find the price point in the market.
Good point. Yeah, no, this is fantastic. All right. So that next part, the second part I was talking about earlier, are the cycles of the economy. Help us maybe understand, are there cycles? And in your opinion, what do those look like, and what should we, be thinking about past and future as far as those cycles are concerned, as it relates to, economy, finance, and the industry, and what we should be looking at?
Yeah, this is great. I mean, I've written a book on this called Recession Proof. Came out in 2016, I want to say, maybe 2014.
Yeah. And in full disclosure, I knew that and read it.
Okay, good. Then you have read it. And I also have an online course that's been taken by a couple 100,000 people on recession proof. That's up on LinkedIn Learning.
Right.
And the big idea is that there's always a recession somewhere. Always. Right. Some business, some industry is dying right now. But also, even in the worst of times, some industry or some business is growing. And so the trick is to be really agile in your response. There's always some career field, there's always some industry, there's always some region in the economy that's dying. There's always some region that's thriving. And you may need to position yourself. You may need to think about changing where you work, who you work for, what part of the industry, what industry, all those things you may need to be willing to change, in a down cycle. So I think thinking about that's the right way, because cycles in the business, in the economy, they happen, right? Interest rates, we think about the economy, interest rates are high. That causes growth to slow. That's what we saw material handling in 2024. Then interest rates start going down. And so as interest rates go down, hopefully that causes growth to pick up. And then after growth picks up, okay, well then interest rates go up again and then growth slows. And then growth starts to slow some more and then interest rates go down and then it comes back up, right? So the push and pull of interest rates and growth and inflation, these are kind of three pieces that kind of move together. And I realize it's very difficult. Even as an economist, it's very difficult to predict these things. But as an individual or an executive working in some business, just being aware of what's going on is important. Of course, I'm sure, right? You'll see it probably before most. If sales aren't there, if marketing isn't driving the dollars, it may not be marketing, it may not be you, right? It may just be the economy, right? The whole industry has slowed. Well, what does that mean? Well, there are implications for your career, for your business. Obviously, if you're in marketing or you run a marketing firm and sales are down, there's only so much you can do because the whole industry is down. But there may be pockets of it that are seeing more action, right? So maybe heavy equipment is slower. Hey, automation over here is really hot because the job market's still hot. So maybe do some more marketing on the automation side or do some more marketing on other things, right? So there's different parts of the economy, there's different parts of supply chain where there's always more action and other areas where there's less. And the trick is to follow the money. Even if you're not a financial professional, really valuable thing, follow the money. Always, try to find those opportunities before others. And if you do, you don't have to be there way early. You probably don't even have to be there too much quicker than everybody else, but you do need to be there before everybody else.
Yeah, I used to have a trainer that told me you only have to be one chapter ahead of your students. And so let's end on a high note because sadly, we're almost out of time. But thank you again so much for doing this. I don't know if our audience realizes what a treat this is, but I promise you what you're getting from Jason right now is a big deal. You can definitely appreciate what he's been telling you and what value you're getting from this and apply it. And on that note, to wrap it up, what would you have the supply chain and material handling marketing professional remember from this discussion? And then what would you have them do?
Yeah, so it'd probably be three things. I mean, the first thing is to always be learning new skills, always be learning new stuff. And whether that's in marketing or in another sector, the more you learn, the more you earn. And so I would be telling everyone to make investments in themselves. There are really only two investments that pay out above all others. And the first is investing in yourself, your education, or your children's education, or something like that. The second is a business you own and control. Those are the two things that have the highest payouts out of anything you can invest in. So, investing in yourself, always good. Maybe I saw this online course, this in-person thing, this executive thing, doing an MBA, like I thought about doing it. Yes, like yes and, right? We'll do it like the improv thing. Yes and, do it all, right? The next thing I would say is, to not just invest in your education and learn more stuff. I would tell you to also invest in your own platform, right? So you may be working for company X now, and maybe you used to work for company Y. Maybe someday you work for company Z. You take with you what you have done. So making sure you have visibility around the assets you have created, the value you have created, and that you are sharing that in a public forum and that that's visible online. That's really important from a credibility standpoint, as well as from helping expand the reach of your identity. And mental real estate is the most valuable asset you can own. And people always say, well, it's about who you know in life. It is absolutely not. It does not matter who you know. The only thing that matters is who knows you.
That is fantastic. I cannot tell you how powerful that is. And I appreciate that. And with that, Once again, thank you. Thank you to the audience for listening or watching. Hey, look, guys, at the end of the day, our goal as supply chain marketing professionals is to eliminate outbound. And I know that's controversial and provocative, but if all you did was receive orders, I promise nobody's going to complain about that. So here's what I want you to remember. Our job as supply chain marketing professionals is to have them knock on our door. So just remember that. Thank you again, Jason. Thank you, audience. And with that, may the next 12 months be your best year ever.
To discover how you can blend your marketing instruments into a harmonious sound and rise above the noise, schedule a 30-minute consultative session. Email morgan@supplychainbrainmedia.com. Again, that email address is morgan@supplychainbrainmedia.com. If you have any questions or episode suggestions, you can send those to morgan@supplychainbrainmedia.com. Thank you for joining us for this episode of the Supply Chain Marketing Show presented by Supply Chain Brain Media. This is an omni-channel production in conjunction with PWE Media.